So hi everyone, this is Wisdom from Wisdom Wealthy Academy, and welcome back to part 2 of moving averages. So in this video, we want to see exactly how can we using moving average to make some profitable trades in Forex. But before we go in further, I want us to first learn something small about the Japanese candlesticks, these red and the red and blue candles you are seeing. So they can be blue or they can be green depending on your settings. So it is not for a must. So when you open up a candlestick, it normally has some features like this. It has some features like this. It has an upper shadow, this one here, which is also called the wick. Then it has a lower shadow, which is also called the tail. And then it happens the same for this red candle, upper shadow, then the lower shadow. So this upper shadow has its highest point, and it is called the high. Then it has its lowest point. It is known as the low, and it is the same as this red candle. So when you look at this blue candle, it opens low, just like you see here, and then it closes high, just like you see this word high. So it means that the price has increased. And then when you look at this red candle, it opens high and then it closes low. So it simply means that its price has moved down. So they have these big bodies, these big boxes here, and these ones are called the real bodies of the candle. So it simply means that when you see a red candle, the price is moving down, and when you see a green or a blue candle, the price is moving up. As simple as that. Hope that is clear. For these blue or green candles, they normally open low and then they close higher. So that means the price is going up. These ones open high and then they close low, meaning the price is going down. So to give an example, some can open here at around $2 and then it closes right up here at around $3, which has given a positive increase of 1. And then this one can close from 4 when it opened from around, let me say, 7. And that means that one has decreased by a -3. Is that okay? So that is simply how to read these candlesticks. Right. So when we go back to our moving averages, so when we go back to our MetaTrader 4 and then we put in a moving average, trend, moving average, let me say put a moving average of period 15, and then the exponential moving average, then it has a curve line, it is applied to close, it has that is under parameters. Then for levels, it is okay even if you don't change them. Then the visualization is always on default for all time frames. Then parameters, then you simply click on OK. So the moving average will pop up, and that is this green line you're seeing. Then we agree that this moving average for period 15, it signifies the average price movement of the previous 15 candles. So when you look at this icon right up here, it has M1, M5, then W1. For M1 it stands for 1 minute, then M5 stands for 5 minutes, and then M15 stands for 15 minutes. So you can hover over them, it is okay. I'm using the H4 and that one is standing for 4 hours. So 4 hours simply means that for each and every red or blue candle you are seeing here, it took it maximum of 4 hours to be completely formed. Even this one, 4 hours to be completely formed. Even this one, 4 hours to be completely formed. Every candle you see here, it took it a maximum of 4 hours to be to be formed. So when it is H1, when it goes to day 1, that is the D1, it simply shows that each and every candle took 1 full day or 24 hours to be completely formed. So when you have this moving average, let us get into the past a bit. You will see that the price is moving up over it, and then it moves low over it, then up over it, and then below it. So when the price closes, for example here, when the price closes above the moving average, it means that the price is going to continue high, or the price is moving higher. And when the price moves below the moving average, it simply means that the price is going to go down. And this is for period 15. So we can simply make some proof and see, when you look right here, the price is still below the moving average. But we want to wait and see the price to close above the moving average, and then we can make a simple order. So move kind of a candle F12 of 1, F12 of 1, 1, 2. So the candle has closed above the moving average. So it means that we are now going up. When we are going up, we call it bullish, and then we are going low, we call it bearish. So if we are bullish, it simply means we shall make a trade from the close of this candle. All right. So we saw it that the blue candles normally close high. This one has closed from here. So if we take a trade from there, and then you can exit from anywhere you want, then you have to put a stop loss, etc. But we shall be seeing that more in the future. All right. So let's just try to move up and see if the price continued up. The price continued up and then it came back down. So when you look here, the price has closed below the moving average. It means that there is a probability of us falling up to around this level. Not because it's a must, it's not a must, but it is just a probability. Because the price has closed below the moving average, and we know that when the price closes below the moving average, it can keep going down. Let's go, and then we see if the price closed down, or it closed down a bit, but it might not keep going down. Then it came back up. So when the price closes above the moving average, we are right there. It means that the price will keep going up exactly until it did so. It did so go up. We are waiting for the price to close below. When the price closes below the moving average, we anticipate that it will keep going down. Let us try to move land. We see it did go down, but it will eventually go up. You see exactly. So when the price, it kept on going down. So we are seeing that when the price closes below the moving average, it normally keeps going down. And when the price comes, for example here, and then it closes above the moving average, then it keeps going up. Am I telling you to trade this method? No, I'm not telling you to use this method, simply because it has other things we are supposed to add into it, and then it can be a good trading strategy. So let us say and wait for when the price closes above the moving average and see if the price still goes up. So right here, when the price has closed above, the price has closed above the moving average right here, it means there is a probability that the price is going to keep going up. Let's move and see one where it did go up, but it eventually came down. So that is a loophole within the strategy. So here it is below, it means we can keep going down, and exactly we went down. You see? So the strategy can work, but it can work on only one condition: when we add in some other extra techniques to make it more profitable. But we have seen that when the price comes, we have seen that when the price closes above the moving average, it keeps going up. And when the price closes below the moving average, it keeps going down. So in the next video, we shall be adding in more moving averages, and then we see how we can use more than one moving average to become more accurate. So right here, the strategy is like 10% accurate, but we need a strategy which is around 80% accurate so that you win at least 8 out of every 10 times you make a trade. So thank you for watching this video. I'll see you in the next one. I'm Wisdom Jordan. Bye bye. Do not forget to subscribe.